Hi guys, welcome back. This is the last video of the miniature series we're having on the subprime or bad credit auto loan financing section for autocreditfinancial.ca. The last little bit of information I want to touch base with you guys on is one of them is subprime lender's profile and the borrower's profile. Just a little quick historical background on subprime business, that subprime lending was involved with the realization of a demand in the marketplace for a loan to high-risk borrowers with imperfect credit. The first subprime was initiated in the year 1993. So that's in 93. That's when this business first started. And typical profile of a lender is, to access this increasing market, the lenders often take on higher risk associated with lending to people with poor credit ratings or limited credit rate histories. For example, they will lend money to consumers that have bad credit. The FICO score indicates a lender the rate of default. Those with credit scores below 620 have a much higher default rate than those with a FICO score of 720, for example. However, if a borrower has sufficient income, then he or she may qualify for a subprime loan. Subprime loans are considered to carry a far greater risk for the lenders due to the credit risk characteristics of a typical subprime borrower. Therefore, the lenders use a variety of methods to offset these risks, and in most cases, the high interest rate is charged to offset the risk that's involved in case of repossession or any cost that's can be associated with this loan. So they may charge a higher late fee. Maybe they will charge a higher over the limit fee, yearly fee, or upfront fee. Now, the borrower part, which is the consumer part of things, is their profile. Typically, subprime loans can offer an opportunity for the borrowers with a less than ideal credit record to become a car owner. Borrower may use this credit to purchase homes, or in case of cash out refinance, finance other forms of spendings, such as purchasing a car, paying for living expenses, remodeling a home, even pay down a high interest credit card. However, due to the risk profile of the subprime borrowers, this access to credit comes at a price of a higher interest rate. So, increased fees and other increased costs. Subprime lending provides a method of credit repair. So this is another interesting topic I want to quickly touch on, is with good records of your payment and with the proper loan providers and subprime loan provider, that is, your credit will actually increase in score and repair itself, let's say within 2 years or so. So not only you can autocreditfinancial.ca can provide you a car, but they can actually ultimately repair your credit in the long run, as long as the payments are paid on time and you didn't default on the loan itself. So here are some general characteristics of borrower that's in the subprime market. If you have 2 or more loan payments paid in the past 30 days, that's due in the last 12 months, or 1 or more loan payment paid in the past 90 days due the last 36 months. If you have any judgment, foreclosures, repossessions, or non-payment of a loan in the past, that's another characteristic. If you have declared bankruptcy in the last 5 years, if you have relatively high default probability as evident by credit score, so therefore lower score, if you have accuracy of a credit line data obtained by the underwriter. So these are some of the typical borrowers' profiles that will come into the subprime market. But not to be discouraged, with the proper lender and the proper broker, you can actually repair your credit with time. And this is very true in the case of autocreditfinancial.ca. So if you have any questions, please feel free to contact us by email, or if you require an application, they have one built right in. You can fill that out and it will go straight into their team. And that concludes our miniature series on bad credit card loans, and I hope you enjoyed the videos, and I will see you guys next time.